Today, we're going to talk about Marysville home prices. We're going to look at everything through second quarter, and we're in July of 2025. We're going to talk about what's happening in the economy overall. Then we're going to dig into the market specific data. And why should you listen to me? I'm Anton Stetner. I actually live here in Marysville. I own the largest brokerage here. I've sold thousands of homes here in our local area. I've been selling real estate for 23 years, and I've been digging through this data since 2003. I'm kind of a nerd, and I just want to share my nerdness with you. So the median sales price in Marysville last month was 667,500, up 1.1%. The average price was 688,000, up 8.3%. Let's smooth this data out and see what it says then. It goes to 640 for the average and 633 for the median, up 2.2 on the median and 4.2 on the average. I do like looking at the monthly data because the monthly data is very raw and there's enough sales happening to where this data is moving in the right direction. Also, as we get to June right here, understand this is usually the peak in the market. All of the appreciation happens during the spring. The market then usually peaks right about this time, and then prices usually stay flat or go slightly down for the rest of the year. Let's go look at new listings. So new listings are down 12.3% versus last year. Homes for sale is up 19.3%, 204. Pending sales up just 1%, 97. And we have been seeing this, and the media has definitely been reporting this. They've been using this as a tactic to scare everyone. They've been saying inventory is shooting up. Inventory is up slightly, but this increase in inventory, even though the percentage wise seems dramatic, when you come from an absolute floor and you move up significantly from them, the numbers are huge. And so the media is using this as a scare tactic, saying, you know what, the market's becoming overloaded. Not here in the Seattle metro. There are places like in Florida or Austin, Texas, where prices are going down because of the massive rise in inventory, but we don't have that here. And the lack of new construction, I think, is going to continue, or like we just showed in that builder confidence report. Month supply of pending, this is really where that data starts to show up. You can see there's only 2.3 months of supply of pending in June of 2025. The months of supply of pending can be thought of as below 5 months, 6 months is a seller's market, and above 6 months is a buyer's market. At 2.3, you are still in a seller's market, but the market has been slowing down slightly. There's been a little bit less sales. Part of this is because of geopolitical events. Part of this is because of rates. Part of this is because of uncertainty and tariffs. All of that add to the market and create a drag down. With rates being at almost 7%, less homes sell. There's a magic number at about 6.5. Above 6.5, the market slows down. Below, it starts to pick back up. And from a historical perspective, let's just go look at it over a longer period of time. You can see this is the great financial crisis where we had 11.3 months in Marysville. And right now we are basically back in line with part of 2018 and slightly above 2019, AKA a more normal market. Don't let the media scare you. Let's go back to 3 years worth of data. I love looking at the percent of original list price. The percent of original list price is one of these data factors that can show you the heat of the market. This data, when it's traditionally at around 98%, the market is even, not necessarily bidding wars. But as you can see in the data, when it crests 98%, there are bidding wars. So last month it was 99.2. What that means is if the average home went on the market for $100,000, it sold for $99,200, which means we are still in a situation where we're most likely having bidding wars on some of the best properties here in Marysville. The average price per square foot is $365 a foot. One of the things I always like to mention when we're talking about the percent of original list price and the price per square foot is as the percent of original list price starts to drop or your price per square foot starts to drop, this is an indication of the market slowing down. Conversely, if you're hunting for deals, one of the things that you can can do is you can resort the whole city and look for things that are the lowest price per square foot that have higher days on market, and know that the low price per square foot and the higher days on market is an indicator that that might be a deal. The days on market in Marysville last month on average was 29 days, and it's rising. So you can see that it usually peaks during the winter and comes to a low in the beginning of spring or around June. So we already hit our low in May of 24. And then last month in June, it was 29. The average property took 11 showings for it to go pending, but the average property only received 5 showings. I like to always illustrate, if your property has been on the market somewhere between 1 to 2 weeks and it received those 5 showings, and we know its condition is good, we know it's properly positioned inside the market, we know that it's being marketed well, then price becomes the issue in relation to that specific listing. Let's go look at this data another way. When we look at it in a year-to-date fashion, you can see year-to-date new listings is down 8.3%. Our pending sales are down 17.4%. Closed sales down 13%. And days on market has shot up from 21 to 32. The reason I like to also look at this year-to-date versus the month over month is it smooths the data out. It gives you more of an overall picture of what we're seeing in the market. With then the median price year to date, $699, basically $700, up 2.6%. The average price up 1.5% year to date. So it really looks like in 2025, we will not appreciate as much in 2025 as we did in 2024 here in the city of Marysville. So what does this mean for buyers, sellers, and investors here in Marysville? 1, buyers are getting a little bit better deals. 2, sellers, you need to be priced correctly and positioned correctly inside the market, and you're going to have to be one of the best condition. 3, investors, we're nearing the end of investor season. Investor season is because the rates have been high and this little bit of uncertainty has created some other economic opportunities for us to make offers, things at a better deal. There's not as many wannabe investors out right now. I believe as rates come down, the market will pick up, and rates have started trending down, but they're not trending down as fast as we want. And that's why there's this whole political kerfuffle right now where politicians are attacking Jerome Powell. But long term, we know rates are going to come down. So mark my words. As rates come down, more buyers enter the market, more demand for property, which gets increased prices. So if you're a price sensitive buyer, we need to get you in now. What I want you to realize is that these real estate statistics are for the whole city. So for your situation specifically, or your property specifically, we'd have to dig into the actual neighborhood, into what's happening in the market and that property. If you have questions about any property specifically, feel free to give us a call, hit us up at resg.com, drop any questions there down in the comments. Subscribe if you live here in the local area and you want to see more content about real estate investing, land development, the market, and just how to make more money in real estate. I'm Anton Stetner. Thanks for watching.